The Bank of Canada just announced that they're going to hold their overnight lending rate at 2.25%. And I think that was fairly widely anticipated. But I wanted to have Daniel Patton from Better Mortgage Selects to explain to us in a little bit more detail what that means for mortgage rates, because that overnight lending rate is not the variable rate mortgage rate. Is not a mortgage rate at all, but it is tied to the variable rate. And so I thought it would be useful to have Daniel explain to us in really broad strokes what that announcement means for buyers and sellers and what that signals to him that the Bank of Canada is thinking for the economy in general. So, Daniel, thanks for joining me.
Thanks for having me. I appreciate it. Yeah. Big
Yeah.
news today. So we're holding. No news is kind of big news in this scenario, right? We like no news in a way. It's no movement. It's good. It signals stability. But for those that aren't aware, this is an announcement that's tied to the bank's prime rate. If you are a variable rate mortgage holder, or if you have a home equity line of credit, or if you're out shopping with the intent of taking a variable rate, this announcement would in most cases affect you. And the announcement is there is no change. Okay. So all discounted variable rates will stay the same. HELOC rates stay the same. That's the announcement. The Bank of Canada will meet 8 times per year to decide what we're doing with prime rate or the overnight lending rate. Sorry, Fiona, to your point. And today, again, we held. So that's good.
Yeah, I think it's also quite good for buyers. There's been so many buyers or so much uncertainty around what's happening with one, affordability got out of control when prices were high and interest rates were high. And now that rates have come down, I think it's human nature to think, am I buying at the bottom? Is it going to be less expensive? And to me, this rate signals the economy is kind of ticking along the way it should. Room for improvement for sure, but they don't need to do anything to stimulate the economy quite yet. And buyers can enter the market with some kind of confidence that rates are what they are and will be for a little while. Last time I said that, things didn't go well.
No, but I would agree. I think if you listen to the words of the Bank of Canada, they've been telling us this for a while, that we're in the neutral territory for interest rates. They're not expecting to have to lower rates. You're right. Lowering interest rates from an immediate standpoint or from a home ownership standpoint might benefit me. But to your point, when the government lowers interest rates to a certain point, it's usually to stimulate the economy because the economy may not be performing. Maybe unemployment's high or inflation's low. We're not growing. Our GDP's not growing. So the fact that they're keeping it the same and telling us we're in a neutral interest rate is good. It's stability. And that's what we want as buyers. If we're out there shopping, we want to know that if we're buying in a stable market, a market where values are going to appreciate over time.
Right on. For a while, there were challenges with people qualifying for mortgages, and I thought that was largely related to the high prices and the high cost of borrowing. But now that the prices of houses have adjusted a bit, and the interest rate has come down, are you finding it easier for buyers out there?
Yeah, yeah, it's a interesting thing that happens, as interest rates increase, affordability from a qualifying standpoint starts to decrease, meaning
Yeah,
if interest rates are going up, you're going to qualify for less of a purchase because our pre-approval is tied to interest rates. We have to qualify on a stress test. So if you had a 6%, if we were back in 2024 and interest rates were 6%, you had to qualify to borrow that money at 8%. Well, fast forward to today, if you're able to, you can get an interest rate around 4%, which means if you're trying to borrow money, you're qualifying at 6% today versus 8% 2 years ago. So to the buyer, that translates into more affordability. I can qualify for a higher pre-approval.
yeah. And I think that this 4.5% prime rate, is very historically average. So it may not be what it could have been. It may not be the very bottom interest rate that we've seen, but that was hugely unlikely that we will ever see those rates again. So we're kind of back to average, which is nice.
Yeah, we're back to where rates were prior to COVID. If we all remember what happened in COVID, when COVID hit, we immediately started dropping interest rates at a rapid rate, and we saw interest rates get down to 2% and sub 2% in some cases. And that what did that do? It caused inflation to get out of control. And over time, we had to increase interest rates, and rates went from 2% all the way up to 7%, in some cases, 6.5, 7%. So you're absolutely right. When we look back and we say, okay, well, today we sit at 4%, that's an average rate. That's where we were prior to COVID when we were in a healthy real estate market, not something with these crazy roller coasters.
I, for one, am pretty pleased to see this announcement. I think a little bit of stability to the lending world and the real estate world would be very beneficial, or a welcome change right now for a lot of people.
Yeah, I think you're right. I think it's a signal that rates are unlikely to go up for the next little while, which I think is more important for us than rates going down, if that makes any sense. We can bet more that rates aren't likely to go up over the next few years. But it remains to be seen if we continue to drop interest rates at a fast level and inflation becomes a problem again, it's possible that they have to increase rates down the road. So we're going to watch for things. I think we've all become these junior economists, studying things like unemployment and inflation, understandably now, because we know that's what drives interest rates.
Well, I think no news is good news, and the stability is a very welcome change. So, thank you so much for joining us and for explaining what this means for people who are thinking about getting into the market or some sellers who are out there.
You're welcome. Thanks for having me, Fiona.
Talk to you soon.